Investing for the future can make retirement years a lot more enjoyable. So what's involved, you ask? Janet Marcantonio is a financial planner with Bank Boston Private Bank. She's here with some advice. Welcome, Janet.
Thank you.
Money Monday, and as I was just saying, I have to admit, I don't often think about the future. I live for today. So what is it that we must do to get ahead?
We talked the last couple of times about how to pare back your budget so that hopefully you have some excess cash at the end of a month that you can potentially invest. But really the first step before starting on an investment plan is to make sure you have enough in emergency cash reserves to cover emergencies, exactly that.
And well, that's my problem. No, go ahead.
Well, so the rule of thumb that everyone says is you should have enough cash in savings, just basic savings accounts, to cover 3 to 6 months worth of living expenses. And that's your basic living expenses that we went over, those fixed expenses such as rent or mortgage, utilities, taxes, insurance, and then a couple of the variable ones like groceries.
Right.
So
You're
anywhere
scaring me. 3 to 6 months?
3 to 6 months. And you know, that really varies depending on the kind of business
but so
you're
many people
in.
live paycheck to paycheck. It's gotta
Well,
be
they
tough.
do, and that's why, you know, it's a never-ending process of going back to your budget and looking where can, you know, you pare back so that you can
And if
have
you're
some.
diligent enough, do you think people can find ways to do this?
Absolutely.
There's hope?
Absolutely, there's hope. And so even if, you know, you're only saving, you know, $10 a month to start, then build that up to 20 to 50. Once you have really built your cash reserves, and that is so important to do first, because you never know what may befall you. Loss of a job, even though we're in unbelievably low unemployment scenario right now, that's great, but that can happen. There's downsizing happening all the time in companies. You want to have some cash reserves. Also for disability or any kind of medical expenses.
And what's a likely plan of years of how much you would be saving? If we talk, say, retirement, if we talk children's college education, I guess it varies depending on the people.
It does, and you know, that's absolutely the next step once you have your cash reserves done, is to begin thinking about, and it really needs to be a visualization process. What are my goals? Literally write them down and prioritize them and attach a time horizon to each one. So, for example, retirement should be on everybody's investment goal. It should, just about everyone, unless you're already in your late 60s, 70s, and in retirement. But retirement, children's education is a big one on a lot of people's goals. Maybe saving for a new house. It may be saving more short-term for a new car. So, you know, for example, you might have retirement, 20 years is your time horizon. The new home, only 5 years. New car, 2 years. Or you may be, if you're older and now living off of this income, you may want more income from your investment. So that time horizon is now. I want to invest it and get more income.
All right, so first, though, is the cash reserves, and hold on to that.
That's right.
All right, well, we'll have to stop there for today. Janet Marcantonio, financial planner with Bank Boston. We'll pick it up again next Monday. Great. Robin?
In other news now, there's a new Miss Massachusetts. They have, like, parties over this. I'd like to hear from anyone. It might
Not
be
a bad idea.
story.
Head out, go to a field, make a nice chai, you know?
Chai tea?
That's right.
Okay, thank you very much, Fred. Well, the events of September 11th certainly caused a ripple effect throughout the economy, leaving thousands of Americans with pink slips in hand, and now many of them find themselves needing to recheck their finances. Here's Janet Marcantonio now with today's Saturday Savings Tip.
In this economy of growing unemployment, lots of people are suddenly concerned their jobs might not be as secure as they once thought. If you or a family member is facing a layoff, here are some tax and financial tips that may help you weather the storm. As long as you are employed and have a regular paycheck coming in, your first step should be to conserve cash. You should also make sure all your bills are up to date. A good credit report and access to additional borrowings will come in handy if the anticipated layoff materializes. Now, you may consider putting truly necessary expenses on credit cards to build up a cash reserve. If the expected layoff doesn't happen, the credit card balances can quickly be paid off. If the layoff does occur, the cash reserve provides you a cushion, and the credit card balances can be paid off over an extended period. It may also be helpful to arrange additional credit before a job is terminated. In particular, home equity loans and lines of credit should be considered. Home equity loans generally charge lower interest rates than other types of consumer loans, and the interest is most often tax deductible. If you do get laid off and have a critical need for money from your former employer's retirement plan, be sure to arrange for a direct, or what's referred to as a trustee-to-trustee transfer, from the plan into a rollover IRA. That will avoid 20% being withheld, which would otherwise apply if you took a direct distribution from the plan. You can then take what you need from the IRA. The amount you withdraw will be subject to income tax and a 10% penalty if you're under 59 and a half, but at least you'll continue to defer taxes on the balance of the account. That's your Saturday savings tip. I'm Janet Marcantonio.
Still to come on ABC 6 News.
Just 4 days and counting until we say goodbye to 99 and hello to a brand new year. Now, are you ready to ring in the year 2000 with a fresh financial plate? That's a big question. Janet Marcantonio is here to give us some tips on how to do just that, and it is, of course, Money Monday.
Yeah.
And quite the Monday it is after the holidays, and everyone's sort of in this, we have to get ready for New Year's, but financially, are we ready?
Well,
that's a
I think
big
there's
deal.
a few things that you can still do. You know, December 31st is the date that the tax man determines what your tax liability is for all of 1999.
Doesn't
So
matter
you
after
have,
that, does it?
that doesn't matter. So
Okay.
you have a few days left still that you can make a few moves that might limit your tax liability when you come
Dying
to
to
do
hear
taxes.
this.
Well, first one that is very obvious for everyone that can do is this is the time of year to be charitable. So clean out your house of old clothing, furniture, any of those garage sale items. Take an inventory, take pictures for your records, put a market value on them, and donate them to charity.
I never heard the take pictures. That's a good one.
Well, it's a
Make
great
sure.
idea to do, to cover yourself in case you ever get audited.
Okay.
That's the main thing.
Yeah.
And important thing to remember is that for any item over $250, you do need to have a receipt from the charity.
Okay.
So, you know, that's relatively new in the last couple of years.
Okay, that's good.
The other thing you want to do is if you do have a portfolio of stocks, certainly kind of harvest the losses in your portfolio. If you have some stocks you own that haven't done so well, and maybe you're underwater from where you bought them, you can sell them and even buy them back if you wait 30 days and take that loss and offset it either against any gains that you may have taken over the year in your portfolio or just against ordinary income. When you go to file your income tax return, if you have $3,000 in losses from investments, you can offset it against ordinary income.
I didn't know that.
Yeah.
All right,
And
that's
any
another
losses
great
that
tip.
you have, you can carry forward forever, for as many years as you want. The
All right.
other thing that everyone can do is you can prepay any taxes and mortgage interest.
Right, right.
And so, maybe prepaying your first quarter's Rhode Island state taxes, you get that as a deduction for 1999.
On this year.
On
Okay,
this year.
all right,
Of course, the
prepaying.
thing to remember is that if you're, doing it for this year, you're reducing your tax liability for 99, but then you may not have the same deductions that you
Right.
need for 2000. So, you need to balance that.
You have,
But
to, you have to look ahead a little bit.
that's right.
All right.
Some tax steps
Those are
that you
some
can-
great tips. So it sounds like we have a little bit of paperwork to do.
Well, that is
That and other
included.
things. And then, of course, get ready. Don't leave until the last minute, April 15th, right?
That's right.
Get all your paperwork together.
We'll
But
talk
I
a
like
lot
the
about that
photos.
after the first of the year.
Again, it's $250 if you're going to donate something to charity. If the item is over $250,
You need
have
a
to
written
have
receipt
okay.
from the
All
charity.
right, that's
You
great.
bet.
All right, thank you, Janet. Moving on, the end of
Disability insurance, now might be the time to think about it. Here's Janet Marcantonio now with your Saturday savings tip.
Most people are concerned about having adequate life insurance, but having adequate disability insurance is just as critical. Individuals in the workforce are roughly 4 times more likely to become disabled during a year than to die. Now, most companies offer group disability policies at a relatively inexpensive cost to the employee. This can give you some basic coverage, but the definition of disability within these policies is often quite restrictive. It's what they call the any occupation definition, which means benefits will generally cease once you're able to perform any type of work again, even if it's not your chosen occupation. So the ideal scenario might be to purchase an individual disability policy with more comprehensive benefits to complement your group coverage. So how much coverage do you need? Well, it's unlikely you'll want to provide coverage for 100% of your current earnings. The premiums would be too high, and besides, most insurance companies won't provide such coverage because it might encourage abuse. So the general goal is to maintain coverage equal to about 60 to 70% of your current earnings. Now, don't forget that you probably already have some coverage through the Social Security system. But it's not wise to depend solely on the Social Security coverage because it contains that restrictive any occupation definition of disability, and the waiting period before benefits begin is 5 months. The fact is, a permanently disabled breadwinner can have a greater financial impact on a family than a premature death, so you owe it to yourself and your family to maintain adequate disability coverage. That's your Saturday Savings Tip. I'm Janet Marcantonio.
Money now. Decisions that you need to make that could affect your tax refund next year. Here's Janet Marcantonio with your Saturday Savings Tip.
As we approach the end of 2001, there's still time left to make some smart year-end tax moves. First, it's a natural this time of year to make charitable contributions to religious, educational, and other nonprofit organizations. Giving away appreciated stock, in other words, stock that has grown in value since you first acquired it, may be the smartest way to give. You actually get a tax break in 2 ways. It allows you to receive the full charitable deduction based on the value of the stock at the date of the gift, and avoids the capital gain tax you would have to pay if you sold the stock first. Remember that to receive a 2001 income tax deduction, the charity has to receive the gift by December 31st. And speaking of stocks, you may wish to harvest losses within your portfolio before December 31st. The rule is that losses can be used dollar for dollar to offset any gains taken. That includes any stock sales as well as mutual fund distributions. In addition, if you have more losses than gains, you can deduct as much as $3,000 a year of your extra losses against your salary and other ordinary income. And the law allows you to carry over any unused losses to future years. Now, a really important thing to remember is that if you sell a stock just to take the loss, but then plan to buy it back, you must wait 31 days before buying it back, or your loss will be disallowed by the IRS. Finally, if you expect to receive a year-end bonus and you can control when it's paid out to you, you may want to receive it and pay taxes on it in 2002 rather than in 2000.